You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting The Options Insider Radio Network, upon which you are listening to this fine program right now. Hopefully you can join us live every Friday, 1 p.m. Central, 2 p.m. Eastern, where you can hear the magical tones of the program live, raw, uncut, direct into your ear holes. Of course, if you like them, the edited podcast version that comes up after the fact, of course, on your device of choice. If you like what you hear, leave a review to help others continue to find this fine program. It's been cranking away for so long, kind of running away with the tape in the vol space. We love it, but we always like more people. So, hey, help your friends out there discover the program. Leave a review on your platform of choice. And, of course, keep those questions coming. We do indeed like to hear from you guys. And joining me on the old Volatility Views program today, first off, he hasn't been on Vol Views in a little bit. We're welcoming back the old rock lobster himself, Mr. Andrew Giovinazzi from OptionPit.com by way of Carmen Line Capital. Mr. G, welcome back to the program. You know, we had some of the guys on the option block yesterday say they were digging out from 1.5 feet of snow. Is that the case up where you guys are as well in the hinterlands?
We had a foot, but it was nothing but a trifly foot of snow. It's piffly nothing to me.
Piffly nothing. Well, it's a little bit more than the inch you had the last time I talked to you. So
yeah, that was definitely nothing.
That you could blow away as you walk out the door. That's no big deal. But a foot's a little more substantial. Once you start measuring in the feet, that's when things start to get real. And also joining us, I don't think he has to deal with a lot of snow his way, at least not this time of year. But maybe we shall see. He's joining us for a record, I believe, third show in a row, which is crazy. Mr. Simon Ho, the CEO over there at T3 Index, a.k.a. the Spikes Father. Mr. Simon, welcome back to the program. To what do we owe the pleasure of your third appearance in a row, sir?
Well, time zone change. I think that's really the key. And plus, I just, love being on your show, mate. It's excellent.
I was going to say, it wasn't just you had to talk to me every week. You had to get your fix of me every week that kept you going, right?
Pretty much. That's right.
And also joining us today, holding down the MIAX hot seat, good old Mr. SHELLY Brown, the EVP over there at MIAX. SHELLY, welcome back to the program to you as well, sir.
Good afternoon, Mark. Glad to be here.
All right, with the gang all assembled, let's dive right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we, surprise, review some volatility. It's been a weird week from a vol perspective, indeed from a broad index and broad market perspective. You know, we started the week coming off of that truncated holiday week last week, and it seems like things were a little uncertain, a little dicey. We saw a little more heated rhetoric in the old trade war, you know, Washington and Trump saying, you know, maybe they don't need to sign it anytime soon. Maybe they prefer to have it after actually next year's election, which is, I think, was a surprise to a lot of people. Of course, China not exactly looking favorably on the law passed here regarding the Hong Kong protests. So a lot of back and forth, not exactly a lot of it leaning towards the détente that the market was hoping for just a few weeks prior, where, of course, you saw 1% rallies and everything else. And, of course, towards the end of the week now, we're post-OPEC. OPEC now coming out and deciding to deepen and indeed extend their cuts. Of course, a lot of that, some people saying, is theater leading into their big Saudi Aramco IPO. By the way, crude getting a bit of a lift to end the week. Markets also ending the week on a bit of a positive note. Most of the major indices pretty firmly in the green here, about almost exactly 1%. Dow, actually, how often do we say that? Dow actually leading the charge today, up about 1.2, almost 1.25%. And ironically enough, we saw a decent lift to vol throughout the week. A lot of that obviously coming off today now with the markets now firmly in rally ho mode. We did see spikes out there. Was that about 14.25? Coming early into show, it's up a little bit more now, about 14.35. Now that puts it up right around about 0.85 from where it was on our last show. Remember, no show last week for the Thanksgiving weekend, truncated week here, so actually going back 2 weeks now. And we're also seeing VIX cash up almost the exact same amount, about 0.85 as well, right around a 13.5 for VIX cash as well. So very rare we see both VIX cash and spikes both moving exactly the same amount over the course of 2 weeks, which is no mean feat. VVIX also up a bit, but not a lot since our last show, again, 2 weeks ago, up to about 94.5. That puts it up to about a 94 up about half a point from where it was last week, last show, about a 94 then. So a lot of things cooking out there in the vol space. Mr. Rock Lobster, you know, it's been a little while since you've been on the program with us, so maybe we'll start with you, sir. What is catching your eye out there from a broad vol perspective this week, sir?
We had that little bit of a dust-up on Monday, so I thought, here we go. This is going to be a great buying opportunity, and the markets were going to have a good sell-off, and it ended as fast as it started. I think we got to 17.5 or so spiky VIXy numbers, so almost 18 for literally a brief second, and then nobody cared. Literally, I think there was a window on Monday, maybe what was it? Tuesday, where the window was maybe about 90 minutes in the morning, and the market just everything turned right around. Don't really know why. And I think the reality is it feels like traders, investors are just there past the trade war thing. Okay, we're a year and a half in. We don't really care. There's an election next year. The Chinese might or might not push it till the end. Who knows? But, the economies will survive, it appears, and they're trying to work it out. But Trump's basically just I don't care, And I felt like that kind of just crushed. That was the vol crusher. Stocks up and vol down. So I can only assume that's the market's opinion. And they're like, okay, the jobs number was still relatively good in the teeth of the trade war. And I think that's why we have the rally today. So we've got that hot algo rally. From a vol point of view, VIX is down, but the curve is steepened a little bit. So like the volatility curve for the puts. So like those out-of-the-money puts are have a little bit higher vol. They're a little more expensive, although they're cheaper dollar-wise. The vol curve kicked up, so people like to trade butterflies and things like that. It's a more interesting butterfly trade on the downside right now. It's very, very inexpensive for those type of positions. But other than that, I'm like, okay, the 15th is the next trade date time. Tariffs, no tariffs, who knows? But at this point, short-term vol is 12.5%. That's not exactly, a huge number, given, that apparently we have yet another trade deal. So it seems like the market is now discounting vol. It's not 9 VIX. It's not 10. It's not that 9-10 handle that pushes, that gets, the vol buyers really excited. But anyway, that's what it looks like, and I just feel like we're going to have a quiet week until the 15th, until this next piece of news comes out, because I don't see a whole lot more on the economic calendar.
I like that, the hot algo action kicking in here, off the jobs number. Speaking of hot action, Shelly, you haven't been on in a little bit, but we were just talking on our show yesterday, our option block program, about how the numbers are in for November, and OCC numbers at least down pretty hard, down about 9% and change for the month. So November, not a hot month for the overall options industry, but it seems like you guys over there in MIAX land managing to buck that trend. Up 1% in November, sir. What's going on? What's the secret sauce over there in MIAX land, Shelly, these days?
Yeah, I wouldn't say there's a secret sauce. The members still like the performance of the system, the risk protections, the speed. But volume was off for the month relative to the prior month, but it was a holiday month. One day was a shortened trading day. The Wednesday before Thanksgiving's off, always slow. So I wouldn't read anything in the numbers being off in November.
There's a lot cooking in your neck of the woods. We're going to get to all of that fun stuff in a second. But, of course, he's beaming in as well from not quite as early, not quite as ridiculous 3 a.m., 6 a.m., a little bit more manageable for Mr. Simon over there by way of Sydney. Simon, it's been an interesting, actually, couple of weeks since the last time you were on with us, because that was the last time we had a show. So a lot's been popping off in the vol space in that time. What's been catching your eye over that period, sir?
Yeah, well, a couple of weeks ago when we had the last call, I think we had a fairly similar setup. But when I look today, for example, at the term structure in VIX, it's still amazing to me. I mean, the contango in the first contract month is right around 14%. I mean, it's staggeringly high. So for people who have been short volatility over the last few weeks, this has been a godsend. And I think that there's some decent opportunity there. I mean, right now, at least as far as I can see on the VIX Central website, you've got cash VIX is at 13.6, and the January contract's at 16.3. I mean, that's a contango that's very steep and probably worth people's attention, I would say. I think you can do some interesting things around that.
Yeah, I like that. That's definitely true. We've seen that. We talked about that before. All things going on in the VIX futures term structure. Since we're talking about volatility futures, let's get to that as well. There's been a lot popping off in that neck of the woods. Of course, we talked on our last show. We've been waiting. We've been waiting with bated breath now for quite some time for that date to roll around. Of course, November 18th, it came. The spikes futures were listed. We talked about it with you last time you were on, Simon, about how things had finally gotten off. I even mentioned to you at the time, because I've been around for a few of these product launches now, and I know to hold my breath until the very last minute. I wait until the product's actually listed to actually acknowledge it, because I know all those announced dates we hear from exchanges and other people are pretty much just placeholders, because the regulators could come in at any time leading up to that launch and pretty much say, yeah, no, we need to change something or tweak something, and that date goes out the window. So we were all waiting. It seemed like it went off without a hitch on the 18th. Of course, you did mention there were some questions lingering around it after all, and it seems like now we have the spikes futures have been halted, at least for now. So, Shelly, walk us through what's been happening over there. It sounds like the regulators deciding to come in after the launch, which is a little weird. You don't usually see that too often. What's going on in the land of spikes land? We had the futures. Everyone was excited. Then the regulators came in and halted them. What's cooking in the land of spikes? What prompted this, Shelly?
So we were very happy with the initial launch. Everything went off without a hitch. We had several market makers quoting the product. We were seeing markets 5 cents, generally 1 tick wide, oftentimes 2 ticks wide, but very competitive with the VIX future. And we went through our first 8 trading days without any issues. And then we got a call middle of last week from the SEC and wanted to discuss the classification of the index. So for a broad-based index, jurisdiction is fully with the CFTC. And our belief, and through our certification with the CFTC, we all agreed that this was a broad-based, or is a broad-based index. Therefore, we were able to launch with self-certification through the CFTC. We've been in discussions with them since early spring. We filed all the certifications with the SEC in early September, 2 months prior to the September launch, and everything seemed to be going swimmingly. Then the SEC reached out and had a concern that they weren't sure that this was truly a broad-based index and it may be a narrow-based index. And if it's a narrow-based index, it would fall under joint jurisdiction of the SEC and the CFTC. We had discussions with both commissions middle of last week, MJAX and MIAX. Of course, it's MJAX's product. And the thought was to be safe and make things as sure as possible for the investing community. We decided to have a single day, that was last Friday, for firms to unwind their position. Open interest was only about 10 or 12 contracts. So we allowed firms to unwind on Friday and decided a trading halt until we resolved the jurisdictional issue of the index with both commissions. So that's the status right now. We're in a temporary halt. The product officially is delisted off of the Globex platform for the time being. And we're working with the CFTC, the SEC, MJAX, and MIAX staff to try to resolve the issue of, is this a broad-based index or a narrow-based index, and when could it be relisted? It would be relisted as a regular future or a securities future.
So it's not a problem or an issue with the product per se. It sounds like it's a jurisdictional issue amongst the regulators. Is that a fair way to describe it, sir?
I think that's a fair way to describe it, yes.
I have to imagine it's got to be frustrating for you. I mean, I've heard horror stories like this in the past. You know, if there's one common complaint I hear among pretty much everyone in the options and derivative space is that it takes too long to launch a new product. There's too many regulatory hurdles to overcome. Some of them may be more sensible than others, to put it mildly. And then, of course, something like this happens where they let you get all the way to the actual launch date, actually launching the product, and then they come back to you after the thing is launched. You know, this is something that could have easily, you think, could have been addressed weeks, if not months ago, and they decide after the thing is launched to exert their jurisdictional domain in your area. I have to say, I don't want you to talk ill of your regulators, Shelley. I won't make you do that here. But in general, that whole process, the way it unfolded, I have to imagine had to be, shall we say, a little bit frustrating for you and the team, sir.
It certainly was frustrating, but with all due respect to both the CFTC and the SEC, they're both doing their job. We understand the concerns the SEC has, and that's why we're working closely together with them to resolve any concerns that there may be. Like I said, we'd rather temporarily halt the product and work through the discussions and get it right than have a problem going forward.
And Simon, you are the Spikes father, so this is kind of your baby. What are your thoughts about how all this unfolded and their jurisdictional concerns over your baby, sir?
Right. Well, I mean, I'll caveat this by saying that this is clearly Shelley's domain as opposed to mine. But yeah, obviously, as the person who the inventor as such, I mean, it's obviously somewhat disappointing, isn't it? Right? As you say, it's kind of I don't know if it's unprecedented or not. I don't have a long enough understanding of history of these kinds of launches, but obviously it's less than ideal. And we were so excited as a group with MIAX, us, the folks at MJAX. Things seem to be going quite well too. The first, as Shelley mentioned, the first 8 days was actually pretty good. We were quite happy with what was happening in terms of pricing, in terms of the volume that was taking place. So obviously it's frustrating for all, but as Shelley mentioned, this is a long-run venture, and we want to make sure that we get everything right. So, I can't fault that at all. But obviously, it is somewhat frustrating when you think you're not home and hosed, but you think you've done everything you need to do, and then this happens 8 days later. It's obviously frustrating for all. But I'm sure that we're going to get through it quickly.
Yeah, we enjoy slamming the regulators here as much as the next guy over here on the network. But to their credit, they are indeed understaffed and have a lot to deal with. So maybe some of these timing issues could be the fact that they just get around to it when they have to get around to it, and they probably accelerate things when things get closer to the launch date, and that's maybe when they notice this. So to be charitable to them, we did have Hester Peirce and the SEC on the network not too long ago. So we do give the regulators their love here on the network as well. But indeed, the timing wise, it's got to be a bit of a frustrating beast, I have to imagine. Let's go out to the VIX futures as well. Kind of interesting to watch. You mentioned the contango out there, Mr. Simon, and how crazy it has been. It has been crazy. It's narrowed a bit since the last time we chatted here on the show. Last show, that front future, there was a huge chasm between the cash and that front futures, over 2 points, almost 2.5 points, and 2 months out to the Jan futures, actually almost 3 points. That has narrowed quite a bit now between the cash and that front futures, right around 3/4 of a point, and out to 2 months, it goes out to about 1 3/4 of a point or so. So it's come in quite a bit, still hefty, as Simon alluded to, but a little bit less, a little bit mitigated since our last show. Mr. Rock Lobster, I know you watch that VIX futures curve for a living. Some may say you read a newsletter about it. What's been catching your eye out there in the evolution of the term structure these days, sir?
Well, the two things that I thought that were interesting that changed, at least today. Obviously, earlier in the week, VIX went up, and kind of a lot of the premium kind of got crushed relative to where the cash was, which is normal when the market moves. Normally, the flatter the curve is, the more volatile basically future traders think SPX will be. As of right now, the curve is starting to come back into what I would call a normal contango. It's actually the front end is relatively cheap the way we measure it. Our option pit, we have a fair value for the future where they should be trading based on kind of where VIX is. And then from there, the back end of the curve actually is very expensive. Still January is fairish, but like Feb, March, all that stuff it's pretty darn expensive. So if you look at VIX cash where it is now, and then how those like 3, 4, 5 month futures are, they're trading about almost like $1 over where they normally are. If you look at that same curve, snap a picture of it and look at it, in July, all that back month stuff was much lower. So there is some bid in the market for that. Maybe impeachment. Maybe there's like Super Tuesday. There's some election stuff going on, like who's going to be the. So I think there's part of some election premium built in there. So I think what you're going to end up seeing is we could have like crazy future premium back there. And short term, if this bull continues, which it kind of seems like it's doing, we're going to get this like super steep looking curve. So if you're trading Jan-Feb for decay, I think you're going to be waiting. I think that premium will probably stay in there longer because of the elections. The Jan is starting to come in. Actually, the Feb is not. So I find that I think the January part of the curve is very interesting because the future 1625, and we could see it's possible to see a 12 VIX next week, and you're going to have almost $4 in premium in there. So the Jan, I think, is ripe as a trade, which means like a VXX or UVXY will be real interesting moving into the holidays. So it's setting up like it could be a vol-apocalypse, but the other way around, where that future could just crush the crap out of VXX and UVXY. And the Jan cycle for the what I call like the hard vol products like Spike and VIX, be a ton of opportunity, like because the 15, 16 puts are pretty cheap out there right now. So interesting stuff going on. I think the 15th is like an inflection date. The D18 cycle for VIX could literally be crazy. Like everybody freaks out on the trade thing, or maybe not. I don't know what's going to happen. But the date is the 18th, where you have like that maximum inflection for like a VIX and Spike expiring on on the 18th, which would make there's so much gamma built into the products at that point. So I think it could be. I'm positioning for that already, but fair, to be honest with everybody, full disclosure. But really interesting stuff going on. But I think it's this week. I think will be slow, unless of course we have some other news event. But I think it'll be fairly slow in the vol product world. But we'll be building up to a very interesting January. Remember, you got to look forward 30 days. And that D cycle expiration. So a lot of cool stuff, a lot of expensive premium, and that either generates, we get some kind of crazy move in the market, or that premium comes out and, the futures of all products get slaughtered, which can be fun as well. So there you go. Hopefully that was semi-understandable as I rattled it off.
If you want more, listeners, of course, dig into the Vol newsletter over there where he breaks down all that fun goodness in a lot more, even more detail. If you think that's possible, check out the newsletter. If you don't think that's possible, check it out. All right, let's move on to the options front. Let's start. We were talking about the Spikes futures. The lack of a Spikes future towards the latter portion of the week doesn't seem to be hitting the volume on the options side too much. In fact, OI up about 11,000 contracts since the last time we chatted here on the show, but up to about 63,000 contracts. Seems like our friend out there who likes that 1x2 continues to like and continues to roll that and doing it for more size out there to now the big positions out here. Top five beefy positions in Spikes land. Number one is the Jan 26s with 33,600. Number two, the Jan 17. So he still likes that same strike selection. I take it back. He was 1827. Now he's 1726. So he has adjusted his strikes a little bit. He's 16,700 of the Jan 17s. And then number three, we have the remnants of the old position, the Dees 27s for 8,600. Number four, we got the Dees 18s for about 4,300. Round out the top five, we've got the Jan 18 calls. Like I said, a total of 63,000 contracts open. That's up about 11,000 from our last show. So interesting to see that, including a big print since our last show. Looks like he added on a little bit to that Jan 1x2. He did about 7,000 by about 3,500 or so. Looks like here of this Jan 17, 26, 1x2. That was back on the 26th, so a few days after our last show. So interesting to see how the volume continues to go up, continues to roll, continues to persist out there in Spikes land and VIX options land. Not quite the same story. It's been interesting. Certainly overall volume-wise, it continues to be robust, but the ADV, like we mentioned before, has been struggling of late. It continues to struggle to get to that 400K level. In fact, it's back under it yet again, down to about 389,000. So still respectable. Certainly for a lot of names out there, that would be a heck of a lot of ADV. But for VIX, that's pretty anemic. Of course, we're coming into that holiday season, so maybe that has something to do with it as well. Today's volume coming into Showtime was not quite 200K, about 181,000. So it doesn't seem like we're on track to break that ADV much today either. Let's see what the top big hot positions are out there in VIX land right now. The top 10. Number 10, we've got the Dees 12.5 puts, 131,000 open there. Number 9, the Dees 37 halves with about 139,000. Number 8, the Dees 22s, 148,000 contracts open there. Number 7, the Dees 15 puts, our second put here on the list here with 161,000. Number 6, Dees 25s, 166,000. Number 5, Dees 20s, $170 on the tape. Number 4, the Dees 16 puts with 180,000. Quite a few puts here in our top 10. Number 3, the Dees 21s, 247,000. So now we're getting up around 250,000. That's more lofty, impressive numbers. Number 2, 255,000 of the Dees 13 puts. Number 1 with a bullet this week. Not a call, I should say. It's a put. The Dees 14 puts, about 268,000. Looks like 5 of our top 10 here coming on the put side of the ledger. Not a surprise given the fact of what we've seen out there of late. And as Mr. Rock Lobster alluded, maybe foreshadowing his crystal ball pick, we shall see, saying we might be able to see a 12 handle next week in VIX. And of course, we are coming up on the holiday season. So maybe not a surprise that some people are starting to favor the dark side out here. Still overall pretty light, only about 6.75 million contracts open. That's about 4.25 on the calls and about 2.5 million on the puts. So if you know VIX, you know that's pretty light. But again, we're coming into that tail end of the year. Last couple of years, obviously, Christmas and December haven't been as quiet as usual. In fact, last year, Christmas Eve, December 24th, was the great nadir, as I call it, for the year, the big sell-off that really kind of marked everything out there for the year. Most names you look at, they had their 52-week lows on or around Christmas Eve. You don't usually see that. It's not a typical holiday season. That's why we see seasonality usually favors a little bit of lower volume here, but we shall see. Well, let's break down what we're seeing out here. Let's start at the beginning of the week again, because Monday was indeed the big active week, or I should say active day of the week, with about 569,000 contracts on the tape. Looks like something funky going up out here. Maybe Mr. Rock Lobster, maybe you saw this one as well coming across your screens earlier this week. Our buddy Mr. Schwartz over there at Trade Alert, he terms it the Jan 1622, Feb 1520 strangle swap. How often do you see that one going up? He saw it going up for 20,000 times. Looks like more total went up, because I see prints here of 23,500 and indeed 20,000 as well. So looks like it went up at least twice for probably 40-odd thousand contracts, if not more. Again, a total of 569,000 contracts trading on that Monday. So looks not surprising, but still looks like a good chunk of it. This is a funky one. Mr. Rock Lobster, do you see this one? This, I guess you can call it, for lack of a better term, a strangle swap that's come across your radar?
I do. Actually, Mark and I were talking about this type of trade today in our option pitch show, because the elections, like, or the Dalio trade, he's buying it, he bought some March, basically. He bought he bought some puts or whatever. But the March cycle would be the Feb future. So this person is actually doing the thing that I just described on the curve. They're buying a ton of Feb, they'll buy that strangle, and they're going to sell the Jan against it for a slight debit. And the whole idea is, I think they want to hold it and own the Feb, letting the Jan go away, and maybe, that strangle could be worth, that whole strangle swap could end up being worth like $4 or something like that, depending on where VIX is. So, as a trade, I like it. I think it's pretty smart, based on the expectation of where Jan goes versus Feb. So, kind of it's a cool trade, to be honest. It's like, well, how many trades have we seen on this show and all the other shows? But somebody's definitely, they just want to load up on the Feb and they want Jan to pay for it. So, and they're kind of clever because they bought the 1520. They're not super worried about the downside part of the trade, but they are keeping that inside call, buying the 20 call and selling the 22. So I would say they're favoring they're trying to lean a little long in this thing.
Simon, you were just talking at the top of the show about that juicy, healthy contango there, that front portion of the VIX curve. Did this trade come across your radar as well? And do you share the Rock Lobster's admiration for it, if so?
Understood. I must say, I didn't really notice this particular trade. So, yeah, unfortunately, I don't have a lot to add to that one, I'm afraid.
Sounds like it's right up your alley, though, with the contango out there. This interesting one, they kind of disguise their intention here by doing some in Jan, which, of course, is not open. You can't really tell. So it looks like people might be assumed at first it was a roll. I think the way the Rock Lobster said it was easier to intuit there because, of course, makes more sense, I think, doing it as an outright than just as a roll. I like it a little bit better that way as well. And you're right, Mr. Rock Lobster does take advantage of some of the funky juice going on there in the front portion of the curve. Let's go out to Tuesday here as well. Tuesday was also an active day, 468,000 contracts, the big prints out there. And go figure some puts. Dees, 13 puts going up 22,500 times for 20 cents, lifting the offer out there. Dees 22 calls, though, also pretty active with 22,000 of those. Say that, 22, a lot of 22s in there. I said that 5 times fast. Going up for 62.5 cents on splits right off the bid, so a little premium harvesting maybe to the upside. So a lot of that favoring seems like a little bit of downside there in vol. Also, Dees 14.5 puts going up through the offer about 17,000 times, so a lot of downside love on Tuesday. That's kind of what the Rock Lobster were saying, how we saw a little bit of concern earlier in the week, and then it started to come off pretty hard as the algo started kicking in, and people, not surprisingly, maybe fading a little bit of vol there on Tuesday. Wednesday was a pretty light day, about 250,000 contracts on the tape. The funky one looks like a Dees 14-15 risk reversal / straddle with puts, but on a ratio, a weird one. The big print there, 18,200. The Dees 14 puts against looks like some D's 15 calls and puts, so a funky one there as well. Also 24,500. The D's 23 calls going up close to the, actually kind of mid-market actually there, so bit of a coin flip as to that one. Thursday, also a light day, less than 250,000 contracts. It's like the big print maybe was I guess you can call it a funky ratio. Put spread, March 13 puts going up for, it looks like about 20,000 times 19,000 against some Feb 15 puts for, looks like, but on a weird ratio. Looks like 4-1. So I'm guessing some other legs are missing from this because I don't think they'd put it up on a 3750 by 20,000 ratio. That would be strange. That hardly qualifies as a spread. If it does, then maybe they got some house money to burn. That's an extreme house money spread if that is indeed the case. They're looking pretty good maybe on those Feb 15 puts. I have a feeling there's some more Feb 15 puts lurking in. They're starting to do this now in VIX land where they're breaking up their trades even into more small chunks, which makes it a little bit harder to find all the fragments here. These 25 calls also going up for 16,000 of them for pretty much mid-market there. And today, the big print today was 15,100 of the D's 30 calls going up for a whopping dime, exactly mid-market. So like I said, not a lot really lighting up the tape out here in VIX land today. Let's move on over to our friend VXX. A lot of people's friends out here, it seems like, of late, as it continues to do what it seems like most of you want it to do, which is evaporate, down to about 1660. That puts it down over 0.75 of a point from where it was our last show 2 weeks ago. Decent volume on the tape today, about 153,000. The ADV also pretty strong out there, about 235,000. That's not bad for VXX of late. Let's break down the top 10, the big hot positions out there really quickly. We've got number 10, Jan 22s, 33,000. Number 9, the Jan 22 puts. So 22 strike in Jan. Pretty popular. 34,000 of those bad boys. Number 8, Jan 14 puts, 35,000. Number 7, D17 puts, 43,000. Number 6, also 43,000 of the D16 puts. Maybe a little bit of a vertical going up there. Number 5, the Jan 26 calls, 44,000. Number 4, the D27 calls, 46,000. Number 3, the D23 calls, 53,000. Numero dos here, the D16 puts, 54,000. And number 1 with a bullet, D15 puts, 71,500. That's a pretty sizable position here for VXX. Don't usually see them getting up to that numbers too often. Well, that's kind of interesting. Mr. Rock Lobster, I know you're crazies out there in the pitch chat. They love themselves some VXX. They got to be pretty happy now with a little bit of this downside coming back in after VXX had the temerity to go up for a week. How dare it? But now it's going back down. What's catching your eye out there, and what have your crazies been up to over these past couple of weeks, sir?
Yeah, we traded 19 and change or something like that on Monday, and now we're back to mid-16. As far as a trade goes, it's like I think it's less of a trade before the 15th. The K is around 10 cents a day or something like that. And VIX can still move down, don't get me wrong, so there is some downside. But I think a lot of it, once the product moves to the full Jan cycle that had that beefy $16 future, that's usually when VXX gets crushed. Because right now we're at 60% of the product. I think is I got to look at my where I'm trying to remember where we are in the cycle. But a good chunk of the product right now is that future, the Jan future. Let me see here. I'll hit the decay. So it's 63%. January right now. So it's like loading up that real expensive future, and how high will that premium stay with the cash where we are? So I think it becomes extremely interesting, like on a D's 20 or 27 cycle to trade. I think next week's cycle is a little iffy, and that's what we're looking at essentially, like putting on D's 20 positions. I'm looking for D's 27 now that some of the decay is back, and trying to trade it that way because it's setting up for a potentially large move again before the Jan cycle starts buying the FEB, if that makes sense, because it's a very calendar-esque product, meaning where you are on the calendar matters because of the products that it holds. So I would say it's less of a trade before the 15th, but more for the cycles like D's 20, D's 27 into the holidays.
Let's go on into some of the earnings vol as well. Not a ton popping off this week, but it still are some names popping off. So if you're interested in all things earnings and earnings volatility, straddles, and the like, head on over to theoptionsinsider.com. Click on that options news and articles tab. You'll see all these reports, the earnings move and the results reports coming from our friends over there at ORATS. You'll see this week Salesforce popping off on Tuesday, Wednesday, Campbell Soup, and Five Below. For those of you, if the dollar store is too cheap for you, like a little more, $5 store, Five Below, got you covered. Thursday, we have TD Ameritrade, Dollar General, back to the dollar segment, and Kroger's. And today was Big Lots, if you're interested in such things. So a lot of names still popping off here. Again, you can find all those reports. TheOptionsInsider.com. Now we got to keep on rolling, see what you guys have in store for us. It's time for your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, let's get to some of your voicemail. Oh, Mr. Rock Lobster, our buddy Mr. Mark Brand, he must be listening to the show. He heard what you said about it's possible to see a 12-handle VIX next week, and he chimed in to say 20, 30, and 40 are also possible as well. So there you go, sir. Nana, nana, boo-boo to you. What do you say to that?
Well, you know what? See, once you understand about trading VIX, it's more important to figure out how low the product can go than how high the product can go. Because it always can go anywhere on the upside, but really, how low can it go if you're trying to set up a trade? So there you go. That's my poo-poo to Mr. Brandt on that one. To me, it only matters because I'm really trying to make money on the downside, and if I make any money on the upside, it feels like just a lucky gravy day. So there you go. Take that, Mr. Brandt.
I think he's just writing in to give you a hard time. I think he enjoys doing that. We got Michael Smith chiming in. He's following up on what we were talking about, actually what Simon talked about on the show a couple episodes ago, actually 1 episode ago, 2 weeks ago. We talked about that Bridgewater hedge. Well, we called it a hedge. Other folks were calling it, including the Journal, called it this massive downside bearish play. Even the folks at Bridgewater kind of came out and poo-pooed that. We looked at it and said, obviously, he's still long equity and bullish probably. He just has this on as a near-term hedge. Michael Smith, listening, he wrote in saying, hey, he followed up on our show, and he said he wanted to recommend a nice piece on why Bridgewater might be buying those puts. He hashtag risk parity, and he includes a link to the Macro Tourist blog. And it says, headlines are seldom what they seem. And if you look at the article, it pretty much comes down exactly in line with what we were saying on our show, that it is effectively a hedge. But I encourage you, if you're interested in that trade and maybe breaking it down a little bit more detail, it is an interesting article. So pretty much everyone chiming in, pretty much agreeing with us that it was pretty much a hedge in spite of that, shall we say, sensationalistic headline from our friends over at the Journal. Michael Smith also followed up with a question. He says, I've been looking more at Skew lately, capital S Skew. Maybe he's got a funky version of Skew, capital Skew. I like that. He says, looking at a single stock, you can see it easily, but do you guys have a recommendation for comparing it across instruments, i.e. a formula? Well, this is kind of where some of the dark art meets the science of volatility trading, because Skew is one of those things that everyone kind of has their own flavor and how they like to interpret it and how they like to utilize it. Like for me, for example, I'm a pretty standard 50 delta. By the way, that's a pet peeve of mine. People say 25 delta. It's not a 25 delta. It's 25 delta call and a 25 delta put. But remember, you're selling one and buying the other. It's a risk reversal. It's not a strangle. So they're additive. They don't cancel each other out. So it's not a 25 delta. It's a 50 delta risk reversal. So I like to use the standard 25 delta call, 25 delta put. Others like to use a 30 for reasons I'm not sure why. So that means, of course, a 60 delta risk. It doesn't really roll off the tongue the way a 50 delta risk reversal was. So I think you find your level of standardization that you like. That will help at least standardize what you're looking at across various instruments. And then you kind of have a lot of other ways. Some people will say Skew to them. They think of it more as a term structure type thing. So there's a lot of different subjective uses for Skew out there. But Simon, you're out there when you're not busy constructing various things like spikes and other instruments. I'm sure you're looking at ways to kind of standardize and analyze Skew across a variety of names. What do you have to suggest here for our friend Mr. Smith, who wants some sort of easily understandable, standardized way of comparing Skew across various instruments?
That's a vexing question. We could talk about that for days. Look,
you have 11 minutes, sir. Go.
So calibrating the Skew is obviously relatively easy on a single underlying. You simply have all of the put options, and you can look at it, and you can look at how it changes over time, and things like that. So that's very easy. That's very interesting. But to do it across assets is kind of it's very difficult to do in a meaningful way. I think in something that could actually lead to some sort of cross-asset trading opportunity. Skews are inherently different. Some are positive, some are negative, depending on what asset class you look at. For example, in rates, it actually does flip from time to time. So, it's not always consistent like in equities where pretty much all the time it is to the downside. Again, single stocks may also differ from that. It's highly complex. I'd hesitate to sort of say that you could make direct comparisons. However, you could look at broad-based indices, so, big ones like the more Dow Jones, NASDAQ, and S&P and so on, and do comparisons that way. And then you can find out some sort of relative value, I suppose, because there you might be able to determine which Skew is more extended, for example. Let's just say the Dow, this should be the case typically because of the kinds of stocks that are in there, but the Skew on the Dow is likely to be less than it is on average than S&P or NASDAQ, because those two have higher betas than it does. So I don't know, it's a vexing problem. It's quite a big data analytics issue. You'd need a decent computing power to be able to make those comparisons, but I also think it's kind of a fraught exercise. I think it'd be quite difficult actually to take advantage of that. Of course, there are some folks who do that, but then they're well situated to do it from a technology point of view.
Mr. Rock Lobster, same question for you. I mean, outside of the relative standardization of choosing, your 50 or 60 delta risk reversal, which is, I think, probably much as far as terms of standardization as most people tend to go. Even that will get you obviously to different places on the strike chart, farther out, depending on the slope of the Skew and everything else like that. So it's not like you're going to be 5 handles out of the money on every product with that risk reversal. It's going to vary depending on the product. So even within that standardization, there's a lot of variability, a lot of flux. So what do you have to say for this listener here who wants to know, how do you standardize Skew when you're comparing across different underlyings?
Right. I agree with Simon. Almost every product has a unique Skew. I mean, the big indexes are kind of close together because there's a lot of sort of cross-hedging and stuff like that. They tend to get sort of bashed in the line. But if you're trying to compare Apple to Google to whatever, I think you'll go insane trying to do something like that. What I would say is it's probably better to learn a couple of products and how their curve works. I would say in general, index curve, VIX curve, vol product curve, those actually kind of move in a way. They have ranges. Equity curve can be anywhere. The big, like the gold and oil, all like the big commodity products, they kind of have rangy curves as well. So I think it's more important to learn how the curve works in the product you're looking at. And get a little bit comfortable. Like my favorite trade is kind of like arbing SPY and SPX versus VIX and VXX because those curves are related because they're all ultimately looking at how vol trades in the SPX. They're just like different levels removed. So I concentrate on that area because, I just wanted to pick something to specialize in, and that I like that area. I think there's a lot of wiggle room in it. So I would just say learn the product that you want to trade and then get fairly good at it. But don't spend too much time with equity curve, individual equity curves, because, they're like people. They all have different personalities and different curves. And they're like highly volume based on some crazy volume day. Somebody could be just crushing the calls. Or, buying puts or something like that. So The indexes tend to be, I would say, a little more uniform.
There you go. I wish we had some easily digestible formula to send to you right now. What was it? Michael just says, hey, it's 0.75 plus the square root of this equals this skew from this. It doesn't really work that way, unfortunately. So, yeah, I think that's good advice to kind of really pick your products, get to know those pretty well, understand how they work, how they tend to just trade. If you want some good tools on this, I will say on our TWIFO program, we use a lot of the quick strike stuff, which breaks down the skew and the change week to week, and also the shift and the sliding of the skew. Now, obviously, that's futures option, so that's not where you like to hang your hat. That won't be of much use to you, but it sounds like you're an equity guy. But at very least, those are some of the best skew measurement tools I've seen, and maybe if you can get a handle on the variations week to week that might help you going forward to predict maybe what's going to come in the future. There's not a lot of tools out there that are good at measuring skew. That's some of the best. Meanwhile, we have to keep on rolling. Time for us to measure the future of volatility. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, welcome back to the crystal ball. We had an unenviable task last show. It's usually challenging to go out and predict VIX or spikes a week out. That's hard enough. We had to go out this time 2 weeks in time to try to digest all the various macro currents, the broad economy, the trade war, OPEC, all that good stuff, and try to digest it and spit out some meaningful number all in about, 30-odd seconds. So it was a challenge last week, and I think our prognostication last show, and our prognostications reflect that. We had a pretty wide range. Meatball was on the show then. He was on the downside. He was 11.6. Simon was actually the Goldilocks in the middle there. He was at a 12.40. I was on the higher end, uncharacteristic for me, but on the higher end this time of about 12.95. And coming into the latter portion of the show, I'm the closest, but doesn't really mean I win. At least not on the spike side. Spike's still at about a 14.30, so I'm off more than a point there, about 1.35 handles there. So our range of victory usually has to be within one handle or so. On VIX Cash, though, I'm obviously a little bit closer. That's still at around a 13 double or so. Uncharacteristically unched for the rest of the show is here as well. That's surprising. Don't see that too often. So that puts me at about a 0.5, about 0.6 away, which is within our margin of victory. So I will take it then on the VIX. Actually, 0.55, 0.6 away for 2 weeks. Not bad. I may have to pat myself on the back a little bit, just a slight amount. It's not quite my usual bullseye of 0.01 or so away, but I'll take what we can get here. Maybe we have to double that for a 2-week period out here. So that means I get to go first. You guys get to take a minute here to digest. Mr. Meatball or Mr. Rock Lobster already probably alluded to his a little bit, saying he might see a 12 handle in the future out here. That I would not be super surprised at such things. We are coming into the holiday season here, and of course last year was not as quiet as some might expect. And I kind of like where I was last time, but maybe I'm going to take a little bit off the top there. I was at 12.95 last time. I'm feeling some erosion from where we are right now, but not a ton. I'm going to say right around 12.75 for this time next week. And Simon, since you were second closest, you get to go next, sir. What are you feeling for this time? You only have to do a week now. It's a little easier this time, Simon. What are you feeling for next week?
I'm going 13 even.
13 even. Going for a nice round number here for Simon. So cutting me off a little bit to the upside. That's the danger of going first. Everyone recognizes your genius and wants to just jump in around you. I'm used to that by now. It's a cross I have to bear. Mr. Rock Lobster, what do you got up your sleeve here? You going to go 12.76?
I literally, that's what I was thinking 12.75. So what was your number? You were 12.
I was 12. I was 12.75, sir.
12.75. I'm going to scum you by a penny and go 12.74.
How did I know? How did I know you had something like that up here? See, that's why you haven't been on the show in a while. I think there's a correlation there. Just maybe. The scumbaggery of the Rock Lobster continues. See, he doesn't win, so he gets to scumbag. That's what he does. We shall see. Maybe this will be the moment the worm turns on him, or maybe we'll see. I could see a nice 12.75 even this time next week, and then I'll be laughing all the way to the winner's circle. So just to recap that for you there, listeners, Simon's on the upside this week at a 13 even. I was the nice Goldilocks in the middle of 12.75, and then we have the scumbag, aka the Rock Lobster, coming in at a nice healthy, and some might say reminiscent 12.74. Unfortunately, that music means we've come to the end of our journey here yet again. And man, it's surprising how quickly an hour flies by when you're talking spikes and VIX and VXX and all your questions and everything else that we pack into a 1 hour show. It's a meaty, it's a dense hour. Probably could be 3, but we squeeze it all into 1. But before we go, let's go back around the horn. Shelly, let's start with you. We were just talking about what's cooking with the spikes futures. I know that's kind of a wait-and-see game right now. Do you have any insight you could share with our listeners who were excited to see them listed and probably want to see them back? Any time frame as for what you're expecting, and as for anything else you want to leave us with? Any other hints or any teases you got up your sleeve over there in the land of MIAX? Now is the time, sir. The floor is yours.
Well, thank you, Mark. I can't really begin to speculate on the amount of time it will take. We're obviously going to do this as quickly as possible, but we have to work with the commissions. I did want to mention that we've extended the listings and spikes options to out 6 months. The futures were listed out 6 months. When they come back, they'll be 6 months again. Also, I don't know if folks noticed or not, but the options markets were starting to tighten up once the futures were listed. They've widened out a little bit again without the future, but once we get those back, the players were all excited about having the futures, and we're doing our best to get them back as quickly as we can.
There you go. So stay tuned to MIAXoptions.com/spikes. That's the place to go to get all your overviews of all things spikes. That'll also have the news, of course. We'll have it on the site and on the network and everything else as soon as the futures are back. I know you guys were excited. We were seeing the options tighten up. Like I said, it doesn't seem to be materially impacting the options too much from a volume perspective, but I know a lot of you want that underlying to go with it. So as soon as it's back, hopefully sometime soon, we'll let you know. Simon, I know you're working on a lot of things, not just all things spikes. You also got... Actually, I mentioned your milkshake again, so I believe you owe me for a milkshake plug at the very least, Mr. Simon.
Done. I'll buy you one next time I'm in Chicago. How about that?
Sounds good. As long as it's lactose-free, I'm down with it. I'm good.
Okay.
What else do you have cooking in the land of T3, sir?
So we're working on a few things. Some in cryptocurrency, and we're also working on something that is on the interest rate side. So hopefully in a couple of weeks I'll have some information that I can announce to you.
There you go. Check it out, T3index.com. We were talking about dairy options on our TWIFO show yesterday, and I did mention the only barometer of dairy volatility that I know of, which is the milkshake index. Granted, it's mostly for the Anzac region, but I think you can maybe make some assumptions for dairy across the board, across the spectrum. If you like all things dairy, maybe a little crypto, a little interest rates, and of course, all things spikes, head on over to T3index.com. And last but not least, Mr. Rock Lobster, I don't think you get as far abroad as dairy volatility, but if folks are intrigued, they want to really slice up the VIX futures curve with you and talk VXX erosion, where should they go? What should they do, sir?
If those topics are fascinating to you, check out my Vol newsletter. Also, Option Pit has 2 spreadsheet products that help you understand what fair value and how to actually trade and price VXX, VIX, and UVXY. So all kinds of stuff on how to trade volatility, and my Vol newsletter people love it. And that's all I can say. Come over to OptionPit.com, check it out, order it. If you listen to this show, send it out to me, Andrew at OptionPit.com, and I'll let you try out 1 month of the Vol newsletter for $19, just for the heck of it to try it out. And I bet you stay.
That's good savings, listeners. OptionsPit.com. Sign up for the newsletter. You can see how he comes at these amazing scumbaggery picks for all things VIX, as well as all of his other deep analysis. OptionPit.com is the place to go. And on behalf of the Rock Lobster, Shelly and Simon, I thank all of you out there for downloading, streaming, and subscribing. And we'll see you back here next week for more Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.